All right, good morning to the hockey family. It is Monday, April the 21st, 2025. Hope everyone had a wonderful Easter weekend. Last week, at least here, my kids had spring break, which was nice. Got to take the kids up to the mountains for a few days, did some hiking, some really nice weather, and my one son, who actually is turning 4 today, I was having a nice little wrestling match with him, and took a nice elbow to the eye. So I thought I'd be doing this morning's video with a black eye, but that's happy that things worked out there. So happy birthday to my son Nash. Hockey playoffs are upon us here, which is just a really fun time of year. So best wishes to everyone that is chasing a cup. Most of my old teammates are now, I just have a couple that are still playing, but most of them now are coaches or scouts or management, and so wishing everyone a terrific playoff season. All right, so I know we've been kind of following up on the deferred compensation contracts kind of newsletter and webinar we put out in recent weeks. Thank you. Just a lot of really nice feedback. It sounds like just one of those subjects, and again, I wasn't planning on spending a lot of time on that, but we were just getting more and more questions in the office, so feedback on that has been great. And again, feel free to reach out to our team if you have any questions pertaining to your contract, if there's something you're considering. Most importantly, the main point of that newsletter and kind of the brief webinar we put together, if you're going to entertain that idea, all right, you want to make you want to be very sure that it's fitting within your overall wealth management plan, okay? And without question, should you move forward with something like that, you're almost certainly going to want to make some wealth management adjustments to the existing portfolio, right? Because the deferred compensation contract, it acts much like a bond, right? Because it's, in Frank Vitrano's case, when you defer it out that far, 10 to 20 years. So let us know if you have questions on that. Markets last week, I'll be quick here. Obviously the ongoing tariff trade war, whatever you want to call it, more recently, kind of over this weekend, here in the U.S., kind of this back and forth between President Trump and Fed Chair Jerome Powell, right, in terms of interest rates. And if you're willing to take a step back and just kind of remove any political bias that you might have, it's easy to see both sides of this story. So on the one side, and we've talked about it a lot on these videos in weeks in the past, but so President Trump has this agenda that they're trying to implement, and again, like we discussed, there's going to be some pain up front, and corporate executives have echoed that sentiment, and that's why markets have discounted, right, corporate profits, and that's why the market is down a fair amount here in recent months. Okay, so we know there's this short-term pain. And so on the president and the administration side, they're looking to the Federal Reserve, right, who controls interest rates, and they're saying, hey, we know we have this short-term pain, can you help us on the interest rate side, right? Because interest rates are still relatively high, right? And so on the Fed side, the Federal Reserve and Fed Chair Jerome Powell, so they're supposed to work on what's called a dual mandate, right? So inflation, right, that they need to keep inflation in check, and then you need employment to be at reasonable levels, right? So the employment picture is really strong here in the U.S., and inflation is slightly above their so-called target, right? So the Fed's all right, well, we have this dual mandate we're supposed to stick to, and the employment picture looks good, and inflation's a little bit higher than maybe our target. So given some of the tariffs and things, we know tariffs can be inflationary. So in Fed Chair Powell's language, the phrase he likes to use is, we're going to take a wait and see approach, right? So it's just this back and forth, so I don't know. we'll see what comes of that. Like, you can definitely see both sides of that argument. Looking at markets last week, international equities actually had a pretty nice week higher. U.S. equities modestly lower. Okay, so like a more balanced portfolio, you likely did just fine last week with even bonds had a decent week. So you saw the 10-year Treasury here in the U.S. Kind of gravitate back to right around like 4.3%, which is a healthy number. Economic data here in the week ahead. We get some manufacturing data, PMI. We also receive new home sales in the U.S. as well. So we will keep an eye on those and whatever else comes up in the week ahead. So questions, comments, concerns, please don't hesitate to reach out to our team. And again, wishing everyone a healthy and great playoff season here. We'll talk to you soon. Thanks.